Today, we're looking at a pretty major development, the agreement for 3G Capital to take Skechers USA private.
Right, a big deal, valued at roughly, what was it, $9.4 billion?
Exactly, around $9.4 billion. So
Yeah.
we'll unpack the details of the acquisition itself, what it means for shareholders, the leadership situation.
And the financial backdrop, too, right? Like Skechers' recent performance and what analysts were saying before this all dropped.
Precisely. We'll cover all those angles. And hey, if you find this kind of focused analysis valuable, please do consider liking and subscribing. It really helps us keep doing these deep dives.
Definitely helps. Okay, so 3G Capital. Maybe we should start there. They're the ones making the move.
Good idea. They're a global investment firm, been around since 2004.
Yeah, that sounds right. They grew out of the investment office of Lehman, Sekupira, and Tellis, now run by Alex Baring and Daniel Schwartz as co-managing partners.
And their approach is often described as like long-term owner-operator.
Exactly. They focus on established brands, businesses with growth potential. They get pretty involved historically in the operations, aiming for efficiency and, long-term value.
Right. They don't just buy and flip. They tend to dig in. So they see that potential in Skechers, clearly.
Seems so. And Skechers, they've been performing quite well recently, haven't they?
They have. Their first quarter numbers for 2025 were actually record-breaking.
Record sales, you said.
Yeah, $2.41 billion. That's up 7.1% year over year.
And if you adjust for currency fluctuations.
Even better, actually, up 9.0% on a constant currency basis. So that underlying growth is, pretty solid.
Okay. And how did that break down between wholesale and direct-to-consumer?
Let's see. Wholesale grew 7.8% and direct-to-consumer was up 6.0%. Diluted earnings per share came in at $1.34 for the quarter.
So healthy growth across channels. What about internationally? Skechers has a big global footprint.
Huge. International was key. 65% of that Q1 revenue. EMEA sales jumped 14%. America's up 8%.
Wow, strong numbers. Any weak spots?
Well, APAC was down 3% overall. But interestingly, if you exclude China from that region, sales were actually up 12%.
Okay. So China was a main drag in APAC. That makes sense given some of the broader economic trends there.
Right. But despite these record Q1 sales, they did something interesting with their guidance.
Oh, yeah. What was that?
They actually pulled their full year 2025 guidance.
Pulled it. Why? After record sales.
They cited macroeconomic uncertainty, specifically related to global trade policies, sort of hedging their bets, maybe.
Yeah, maybe. Or perhaps setting the stage for this acquisition announcement. Hard to say for sure. They had decent cash on hand too, right?
Yeah. As of March 31st, about $1.24 billion in cash equivalents and investments. Inventory was around $1.77 billion. Yeah. And over 5,300 stores globally.
Okay, so a solid foundation.
Yeah.
Which brings us to the deal itself, announced May 5th, 3G Capital stepping in.
Yep, for that roughly $9.4 billion figure. Now, the terms for shareholders are quite interesting. There are options.
2 options, as I recall.
Yep.
What are they exactly?
Okay, option 1, straight cash, $63 per share. That's a pretty decent premium. 27.6% over the closing price the Friday before the announcement.
Right. A solid immediate return for shareholders who want out. And option 2.
Option 2 is a mix. You get less cash up front, $57 per share, but you also get 1 equity unit in the new private parent company.
So a chance to stay invested, potentially benefit if 3G grows the company further. But those units are unlisted, right? Non-transferable.
Exactly. That's the key part. You can't just sell them on the open market. It's a long-term play if you choose that path, betting on 3G and the current management.
Speaking of management, that's another key piece, leadership continuity.
Yes. The agreement says Robert Greenberg stays on as CEO.
And Michael Greenberg as president.
Correct. The existing executive team remains in place too, and the headquarters isn't moving from Manhattan Beach, California.
So 3G isn't planning a big management shakeup, it seems. They're backing the current team.
Appears so. It suggests, they have confidence in how things are being run, even as they take ownership.
Which makes sense given the recent performance we just talked about. Before this deal was announced, what was the general feeling about Skechers stock among analysts?
It was generally positive. The consensus rating was a moderate buy.
Moderate buy, okay. And the price target?
The average 12-month target from, I think, 14 analysts was $69.62.
It's $69.62. So the $63 cash offer is below that average target, but well above where the stock was trading right before the news broke.
Right. And there was a range in those targets, too, from a high of $93 down to a low of $53. So analysts weren't all on the same page about its near-term public market value.
That spread makes sense. Valuing future growth always involves some guesswork, and Skechers did have strong full-year results in 2024 leading into this.
Absolutely. Annual revenue for 2024 was $8.97 billion. That was up over 12% from 2023.
And earnings?
Earnings were up too, $639.47 million, a jump of over 17%. That kind of consistent growth makes a company attractive for acquisition.
No doubt. So taking Skechers private, what are the broader implications, do you think? Why do companies do this?
Well, going private often means less regulatory hassle, No need for quarterly reports dictated by public market demands.
Right. Freedom from that short-term pressure allows for more focus on long-term strategy, maybe making operational changes that might hurt quarterly results temporarily, but pay off later.
Exactly. More flexibility. And for 3G, it fits their model, perfectly established brand, growth potential, and they can bring their operational expertise to bear.
The premium they offered, that 27.6%, suggests they see significant value there, perhaps more than the public market was recognizing at that moment.
Yeah, they're betting they can unlock more value as a private entity.
Okay, so let's maybe summarize the key points here.
Good idea. So, bottom line, 3G Capital is acquiring Skechers for about $9.4 billion.
Shareholders get a choice, $63 cash per share or $57 cash plus one of those unlisted equity units in the new private company.
Crucially, the current leadership, CEO Robert Greenberg and the executive team, they're staying on. Headquarters remains in Manhattan Beach.
And this follows that strong Q1 performance record sales of $2.41 billion, up 7.1% year over year, although they did withdraw their full-year guidance, citing trade uncertainties.
Right. And before the deal, analysts generally saw it as a moderate buy, with an average price target around $69-70.
So taking it private is a big shift. It's a significant event for Skechers.
Definitely. And you have to think about 3G's motivations. It's likely that strong brand, the consistent growth, especially internationally.
And the potential they see for maybe improving efficiency or expanding even further, their track record points towards a focus on operations.
Yeah, they'll likely look for ways to optimize things. And that choice for shareholders is interesting too. Take the guaranteed cash now or roll the dice on future private growth.
It caters to different investor types, different risk appetites. The long-term picture for Skechers now really depends on 3G's strategy and execution.
It really does. It'll be fascinating to watch how Skechers evolves as a private company under their ownership. It also makes you think about the broader role of these large investment firms in shaping major consumer brands today.
That's a great point. It's a trend we see across various sectors, private equity, taking well-known public companies private. What does that mean for competition, for innovation, for the consumer in the long run? Lots to consider there.
Absolutely. Well, that brings us to the end of this deep dive on the Skechers acquisition by 3G Capital.
We hope this breakdown was helpful in understanding the key aspects of the deal.
Thank you for joining us. We really encourage you to keep exploring these dynamics in the investment world. And one last reminder, if you found this useful, please do like and subscribe for more analyses like this one.
Thanks for listening.